Hey VV Nation, Glenn Tompkins here, Senior Instructor here on our YouTube channel. Welcome to our next video, which is entitled, Why Rideshare and Delivery Stocks Are a Big Risk. Uber is a big name out there, and a lot of people are talking about them, along with DoorDash and LYFT. And you know something, there is a lot to be said about these companies, especially when people are using them to get around instead of driving their own vehicles. So there's some upside and some downside, but I think there's more downside to these stocks, and we're going to get into it. Is rideshare cheaper than owning a car? I wanted to do a story on that, but as I read into the story, this is more of an insurance company, so they were more biased towards owning a car. Looking here, car ownership is actually still less expensive than relying on ride sharing alone. This was based on a survey conducted in 50 cities around the country. They recommend ride sharing alone for those with a checkered driving history or for those who use their car very infrequently. And from a personal perspective, I know a few younger people who live in a metropolitan area where they really don't need to have a car, and parking is an issue and all those different things. So I think that it does play a role in our everyday lives. But from a stock investing perspective, are they what we need to make money? And they are risky. So let's talk about other stories. Uber upgraded to overweight from neutral at Piper Sandler. All right, that's just a story. All right, and I was curious to know what they were looking at in order to upgrade the stock. Here's another story. Uber, Lyft shares boosted as Wall Street continues to like the gig company's recession chances. But a lot of people have moved from working full-time jobs to just driving people around. Now, there's a downside to that. If you're in a really crowded metropolis area and there's a lot of competition, you will be affected adversely trying to do this full-time. But if you're in a more spread out area where there's not a lot of competition for driving people around, you may do a little better. So it does have its upsides and its downsides. And DoorDash, now this is the company that delivers food, and Uber does both. And I like that about them. We'll talk about that in a second. But DoorDash put volume heavy and directionally bearish. Now, interesting, when you look at the companies that drive people around to get them from place to place, as compared to DoorDash, which primarily delivers food, you think that people need to eat, right? And if people need to eat, then this is a great way to get food without having to go out. And there's people that live off of DoorDash. So why is the put volume heavy and directionally bullish on a company that delivers what we need on a daily basis? Very interesting. So I did a lot of work into looking at these stocks as a whole to get a better feel of why some of them are being looked at as bullish and upgraded, and some of them, like DoorDash, is being looked at in the opposite direction. So I went to a website, and I love this website. As a matter of fact, it's TipRanks. I do a lot of research on TipRanks, but I looked at their people on their site, and I looked at Uber stock 12-month forecast. For 67% upside. Wow, that's a lot. LYFT, 62% upside. And then going down to DoorDash, 60% upside. All right, so they've got a high, an average, and a low. But man, these levels of the highs is perplexing to me. So now let's get into the software, and let's take a look at these stocks within the VectorVest software. Why? Because the analysis is where it's at. So if I look at these stocks based on VST, notice that on the scaling between 0 and 2, none of these VSTs are good. If I'm looking at any of these stocks, all three of them, well, 2 out of the 3 are more speculative plays. Uber and DoorDash both have relative values and relative safeties below 1. These are more speculative. But when I look at LYFT has got a relative value at 1.41. Well, if it's got the best upside potential, why is it a sell? Because all of the stocks are succumbing to downward trends. All of these relative timings are below the value of 1, again, which makes it very speculative, makes it very risky from a stock's perspective. Whatever the news is outside telling you that, hey, these stocks have great upside potential because This is great for people to get around and all that kind of stuff. But as an investor, what I really want to know is, can I make money in these companies? So let's do one last thing. Let's pull up a graph of these stocks, put them on a 1 year. And one of the few times where you'll see me use Fibonacci's in regards to my analysis. All of these stocks are below all of the levels of Fibonacci. And if you look at the 1 year graph on LYFT. Now, from an earnings perspective, the earnings are a little bit higher than they were a year ago. Relative timing right now is above 1. It's above a 20-day exponential moving average. Could it be on the run? Man, it's got a lot of levels to break through in order to show me that it's running higher. Uber, in a little bit of a side channel. Again, earnings looks good. RT is right at just trying to get above the value of 1 over the last year, above the 20-day, but now bouncing off a fib level of 23. Could it be on the rise? Notice that it is still overall channeling. And the last one, DoorDash, good gravy. All definitely just moving down below all of the Fibonacci levels. Earnings about even than it was last year, but look at the down moving relative timing. Remember, this one has had the heavy put values on it, or put options on it. So folks, no matter what anybody is telling you, and again, I like that website that I got the information from overall, but man, these are very risky stocks as far as from an investing standpoint. There's a lot of other stocks out there that are better plays, but these are stocks that are being talked about. These are being upgraded. All I want to do is give you the analysis, because we trade off of the analysis. We try to make money off of the analysis. Folks, you make your own decisions. My job is just to bring you the information and do the work for you, but overall, you've got to make the decisions. Told you it was going to be a short video. This video is over, and until the next time, folks, see ya.